Commodities now. Manisha Gupta, commodities editor, joins in with a roundup of all what she's tracking this afternoon. Manisha.
Ekta, thank you for that. I'm looking at the gold prices where we have seen some profit taking coming in. If you look at the current week itself, we are trading at a 3-week lows. We've seen prices decline by 2%. But when you look at the year 2023, we still are in the positive by nearly 9%. But on your screens, after hitting that all-time high of 2070, we're trading at 1977. So nearly $100 of a decline from the kind of highs that we saw in the month of April there. Ghazal Jain of Quantum AMC now joins us to talk further about the prices, on how the sector is doing as a portfolio. Ghazal, hi, thank you so much for joining us. I first of all want to understand your sense on the pricing part itself. With so much of profit taking and the fact that the year hasn't been so good when you look at the buying or purchases by the Indian investor or a jewelry buyer, how are the current prices now treating them?
So, like you said, we have seen some consolidation in prices in May after, prices started the month on a high. Of course, at the start of the month, there was the background of the US banking sector pain and concerns that led to a global risk aversion. And also, we had the Fed policy in the first week of May, which, where the Fed hinted at flexibility and a meeting-by-meeting approach, which was considered dovish by markets. But markets had, run up way too much. They were pricing in a 90% chance of a pause in the June policy meeting, and also they were pricing in 3 rate cuts in calendar year 2023, with the first one coming as soon as July. So we think markets were being overly optimistic. We were expecting a consolidation, which is what we are seeing right now. But as the month progressed, we saw some employment data coming in from the US. Non-farm payrolls suggested more jobs were added than expected. We saw some gains in wages as well. Unemployment in the US again fell back to a 5-6 decade low of 3.4%. Then came in the US inflation numbers. Both CPI and core CPI saw a slight deceleration, but again remained stubbornly elevated. So with this background, we've seen some repricing in market expectations. Now markets are pricing only a 75% chance of a pause in June, and expectations of rate cuts have actually been pushed forward to November and December. And that is why you see this weakness in prices, and I think prices are now reflecting reasonable expectations. In addition, there's this impasse related to the debt ceiling in the US. That too has been weighing on gold prices. And the resulting risk aversion has pushed up the dollar. We're seeing sale of US treasuries, which is pushing up treasury yields, and both of which have been negative for gold.
Point taken. Ghazal, also, when you look at the Indian buying itself, we've seen imports into India for gold decline by 45% for the month of April. Even the ETF buying, for that matter, hasn't been so great. Why don't you start telling us about the ETF inflows or outflows that we've seen in this year until now, the first quarter, and then for the month of April?
Sure. So actually in 2023, we've seen a mixed trend. We have seen outflows from gold ETFs in January and March, inflows in February and April. So for April, we've seen 125 crores of net inflows. Year to date, gold ETFs as a category have seen 176 crores of outflows. So overall, because, in 2023, prices have run up over the last few months, year-to-date returns at around 9%, like you mentioned. So some investors may have opted for profit booking, and we believe some investors are waiting on the sidelines looking for better prices. So that's one trend, but we have seen a consistent rise in folios, and we've seen steady inflows in long-term strategic investment via gold mutual funds, which in turn invest in gold ETFs, of course. I'd also like to mention another trend, because globally, we have seen that after 10 months of net outflows, gold ETFs have seen net inflows in March and April. I think that has happened since more clarity has emerged on, the Fed tightening coming to an end, and we've seen some renewed investor interest in gold, because investors obviously want to capitalize on the next phase of the Fed's monetary policy. So we are hopeful, and we expect to see a similar trend in India gold ETFs too going forward.
Any trends that you already are seeing for the month of May, Ghazal?
We are seeing some positive momentum in May as well.
You said the portfolios have continued to increase. What is the ticket size that we're looking at as the buying comes in?
For gold mutual funds, it's we see a lot of SIPs. SIP book has been increasing. starting from a minimum of rupees 500 to even some tactical allocations of much higher amounts. So that's the kind of range of inflows we're looking at. But the SIP book building up has been a positive trend.
Okay, all right. Ghazal, thanks a lot for joining in. And Manisha, thanks for being with us and taking this discussion forward. Let's do one thing. Let's take a quick commercial break.